Good afternoon and welcome to the Market Closing Show, our collab show between Business Today and India Today Television. I'm Sakshi Batra and this is 3 p.m. show where we are going to be getting you all the stock market closing action. First up, let's take a look at what's hot in the corporate and the financial space. Firecrackers on the last street on the first day of Samvat 2082. Sensex jumps over 600 points above 85,000. Nifty hits 26,100 for the first time since September 30th of 2024 and 200 points away from its record high levels, led by IT stocks, banking names, as well as this is on the back of US trade optimism. India's largest FMCG company, HUL, beats Q2 estimates. Profit rises by 3% to 2,690 odd crores. This is led by growth in home care, foods as well as the beauty business. Declares interim dividend of 19 rupees per share. CEO Priya Nair says 2% underlying sales growth. GST reforms to boost consumption. Also, the stock is up by 2% post results. Oil stocks are in focus as Reliance Industries is going to be recalibrating Russian oil imports as per government guidelines after fresh US and European Union sanctions on Russian oil. Indian refiners including IOC, BPCL and HPCL will also face certain impact on crude supplies and pricing, as well as stocks are right now trading in the red. Seafood shares, however, Avanti Foods as well as Epic's Frozen Foods have jumped by over 12%. Textile stocks like Gokul Das Exports, Vardhaman Textiles, Welspun Living have all seen a surge of anywhere between 6 to 15% as India-US trade deal optimism yet again boosts sentiment. It's another Diwali bonanza for investors as RBI has announced final redemption rates for the sovereign gold bond of 2017-18 series, a huge 325% gain in just about 8 years. Bondholders to also get 12,704 rupees per unit. Let's straight away look at how the markets are trading in the last 25 minutes of trade. Well, we had held on to the 26,000 mark for the large part of the day, but towards the end, we are actually seeing some profits being taken off. Right now, the Nifty is hovering around 25,900 odd levels. So you have seen a swift 100 points that we have given up, about 150 points from the day's high point that we have seen. But still, it's the IT stocks that continue to hold up higher in trade. Names like Infosys, HCL Tech, Tech Mahindra, even TCS, they're all up and about in trade. You're also looking at the banking stocks that are doing well at this point, especially the PSU banks, private banks and the NBFCs that are still managing some gains. What has slipped, however, in trade towards the latter half of the trading session today? You can see the broader markets that have given up a part of their gains in the morning. Now, auto stocks have slipped into the red. Even pharma, infra stocks are now down in trade. So some of the sectors have actually seen some profit taking. Oil and gas definitely is the top laggard at this point in time, as we are also going to be welcoming now our top guest to help us understand the market mood in the new Samvat year. Arun Kejriwal, market expert, is now with us. Warm welcome to you and happy new Samvat year 2082, Arunji. Help us understand what's your thought. We've seen 26,000 for the first time in calendar year 2025, and this is after a long drawn consolidation that has taken place into the markets. As we begin this new Samvat year with a lot of hope and optimism that finally it could be the equities that could come back into flavor this year vis-a-vis the other asset classes like gold and silver. What exactly is your thought?
Good afternoon, Sakshi, and wishing you and all your viewers a very, very happy Samvat 2082. We've started with a bang, there is no doubt, but the way the market has slipped in the last hour is a cause for concern, not any great concern, but yes, over the last 3-4 consecutive trading sessions, we find every day markets open strong, but towards the end they slip. The underlying thought today is once again the US-India trade agreement. We have, I think, more than enough commentary coming in, but
Yes.
Knowing the way President Trump behaves, until there is a signed document, you just cannot rely on it. So today it's IT, textiles, seafood, etc. and you have different stocks which move differently every day. I believe we still need to wait for the dotted line. America is in a bit of a spot with its very, very strong posturing against China. India has played its cards well, being somewhere in the middle league, not being aggressive in posturing, nor replying to Trump's statements and keeping low. I believe we need to keep our fingers crossed and hope that the dotted line is signed on sooner than later.
Okay, got that. In fact, when you're talking about the US, there are these fresh sanctions that have been imposed by the US on Russia's two largest oil companies in a bid to pressure the Russian counterpart, Vladimir Putin, into ending the war in Ukraine. These US sanctions target Rosneft and Lukoil. These are Russia's two largest oil companies that US has actually labeled as Kremlin's war machines. And for more on this, we are now joined by Pranay Upadhyay, the editor for India Today Global. Warm welcome to you, Pranay. Good to have you with us. A lot of developments that are taking place in the last couple of sessions, and now we have these fresh sanctions from US on Russia. Now, what our viewers would want to understand is that India, being one of the largest importers of Russian oil so far, what would these sanctions really mean for us?
As far as the US sanctions are concerned, because the US Treasury Department has sanctioned, as you mentioned, Rosneft, which is a major oil company of Russia, and Lukoil. In fact, if you see Naira oil refinery, Vadnar oil refinery, Naira is a major oil retailer in India, and Rosneft is a 50% stakeholder in it. So definitely there is going to be an impact for India and Indian oil trade. But on the larger aspect of it, Sakshi, the real issue lies here that India has to trade a balance between US and Russia, not only in the terms of the strategic relationship and strategic partnership, but as well as from the economic and the financial point of view. Let us try and break it down from these two aspects. As far as the economics of the oil trade is concerned, definitely things have improved for, or situation has improved for India to even look at the further cut down on Russian oil import if the pressure is indicated in that direction, because the international oil prices have come down. Currently, for the month of October 2025, the oil prices are at around 64 point some dollars. So it is less than 65% dollar. And earlier, like in July 2022, it was as high as $115 per barrel.
Sure.
So definitely there is a cut down. There is a room for India to reconsider. If you see, as far as the stated energy policy of India, that India being a bulk or a major energy buyer, in the third largest energy buyer of crude oil for that matter, India always pursues the policy of a diversification of the oil basket. We buy oil from Russia, we buy oil from the Gulf countries, we buy oil from United States as well. But definitely this reduced, the oil prices have given India a room to reconsider. However, the very question, that will India stop buying Russian oil? The answer so far is no, because India believes in diversifying the energy sources to ensure the energy security and steady supply of our energies.
Fair point. So, but if we are not going to stop, even lowering imports from Russia, do you think can augur well for our anticipated trade deal with the US? That's what Donald Trump in his latest statements has been pointing out to, that India is now going to be slowing down their purchases from Russia when it comes to oil. And that seems to be going well with his own statements, on Diwali, when he was also saying that, yes, we may be closing in on a trade deal with India as well. So how are you looking at that?
Look, as far as the trade deal is concerned, there have been fresh round of negotiation, though there is no breakthrough as yet.
Sure.
But the deal is inching closer to what we still have some time left, because if you see the earlier statement by Prime Minister Modi and President Donald Trump of February 2025, we still have the deadline of till fall of 2025. So still we have time till November. But as far as the reduction of Russian oil is concerned, as I mentioned, that there is a one aspect of it, which is the financial and economic aspect of the oil trade. Another aspect is the strategic aspect. In Russia has been a close close strategic partner, a privileged strategic partner for India. And ahead of Russian President Vladimir Putin's, India visit, which is due on 5th and 6th of December, we do not want to give a message that we are, succumbing to a US pressure and we are leaving Russia, high and dry as far as the oil trade is concerned. But if you carefully see, actually, the latest statement by US President Donald Trump, he clearly mentioned that he understands the aspect that India cannot bring it to zero, but it will gradually reduce. And now there are conditions in which India can reduce because the price cap, which was imposed by the Western countries, which is at around $60 per barrel for the Russian oil, now that the gap has reduced. As far as like if you compare the earlier prices and the price at which we are buying. So definitely there is a room for India to reconsider the Russian oil. We have seen indications of reduction in the month of September. The October figures will come in few days. Then we will get to know that how much reduction has happened. But definitely the US sanctions, the Treasury Department sanction on the Russian oil companies will definitely, rather they'll induce or they'll demotivate many of the oil importers, not only the Indian oil importers, but many other oil importers as well.
Okay, thank you so much, Pranay, for all of those details. Two important points for all our viewers there. That one, we're not stopping Russian oil. There is no indication of that from the government as of now. Yet remember that we have to balance both Russia and US as our strategic partners. Two, even if we are lowering the crude oil imports from Russia because of the US sanctions, as some of the reports from Reuters have indicated that RIL is now recalibrating its own Russian oil imports, is because there is also now room for us to diversify our purchases because the crude oil prices themselves have come down, and therefore the benefit of the huge discount that we were so far enjoying from Russian oil does not really matter that much because the prices themselves have cooled off. Let me take Arunji's view on that. Mr. Kejriwal, help us understand, how are you looking at all of these newer scenarios developing? You did mark out that we have to watch out for how Donald Trump really goes forward from here. So far, some of the statements are coming in optimistic with these newfound realities where we could be lowering some of the Russian oil imports. Could this be the icebreaker yet again and take our negotiations forward when it comes to the trade deal in India's favor?
Sakshi, you've hit the nail on the head. Let's also read another statement that came in from the European Union, I think yesterday or day before, where they said they will stop importing Russian natural gas by the 1st of January 28. It means they are going to continue buying all through 26 and 27, which means 2 years from now. So if you have Donald Trump clamping down on India and on whom he has already imposed 50% duty tariff because we import Russian crude, and European Union says they are going to continue buying Russian natural gas for 2.5 or 2.25 more years, I believe there is plenty of room for negotiation. One doesn't need to get worried. What is also important is, in the midst of all of this, while he says he's going to meet the Chinese team, probably in South Korea, he has also imposed a duty of 155% on them over the last couple of days. So what he says, what he does are not necessarily in a sync or in an order. So while one needs to be optimistic, you also need to be careful and not get carried away. Just one small point on the markets. We had opened with a huge gap in the morning, and we have given away almost 75–80% of that gap has just gone away, which means the optimism that we had during the vacation is no longer there as far as trade talks are concerned.
Okay. Since we're talking about the entire oil and gas space, this is the index that's lost the most, about 0.6% in trade today. Help me understand, what's your view? How are you looking at both the upstream as well as the downstream companies at this point in time? Amidst all of these developments, how should one be really playing this sector?
So 3 data points for you and for your viewers, Sakshi. Number one, Reliance gave results which were
Yeah.
better than what the street expected. Number two, uh, for Samvat year 2081, which ended, but for the movement which happened on Monday, the last day, the index, that is the oil and gas index, would have given negative returns. There was a sharp rally post the Friday results, which led to the index closing in positive territory for Samvat year. So I believe this gives you a sense that the oil and gas scenario, in spite of the fact that oil prices were on a decline throughout of all of last year, have done nothing for the index. Now
Hmm.
coming to your question about the OMCs as well as Reliance, which is the largest in the segment, I believe the results will be more or less on expected lines. Companies would perform reasonably well. In India, we need to understand that while OMCs are not directly regulated, oil uh, prices at the pump level are fairly controlled in some manner to see that the common
Sure.
man doesn't suffer. So I believe all put together, you would see a lackluster performance coming in,
Got it.
not affecting the common man.
Got it. Since we're talking about earnings, one major earnings that have come in are from the FMCG pack. We've seen Hindustan Unilever report its Q2 results, beating the estimates, remember. And the CEO, Priya Nair, has said that volume-led growth remains the clear focus. She's in fact used the word obsessed with volume-led growth is what HUL's focus will be. And the short-term GST impact is expected to ease, however, by early November, with sales set to pick up. Let's listen into what she had to say, and then we will decode the FMCG sector for you.
Sure. Let me start with the structural shifts that we will make and our focus. We will be obsessed with volume-led revenue growth. This will be our focus, our obsession. I think Ritesh mentioned, and I think it's important to first look at the macroeconomic variables of India and how, what's happening. First is the GST reform itself, and the GST reform is most welcome, which the government has done, because that augurs well for consumer sentiment improvement, overall demand improvement.
All right, obsessed with volume-led growth, and of course how the GST-led impact will be seen in the ongoing quarter as well as the next couple of quarters as well. Arunji, let's come to you and to understand FMCG as a sector. Widely consolidative sector, underperforming sector in the previous Samvat year. But what we've seen towards the fag end of the Samvat 2081 was the big push that the government has given by way of GST cuts. That's clearly likely to impact consumption as a theme, and how volumes are going to be seen as an impact of the GST cuts as well. How would you look at the earnings presented by HUL, one? And secondly, do you see any impact continuing in the next couple of quarters as well for the FMCG companies on the positive end because of the GST rate cuts?
So, Sakshi, let's understand what GST has done. GST changes came about only because the economy was caught in the crosshairs of Donald Trump and his tariffs. The greatest achievement and benefit that India and its economy has got is the government chose to bite the bullet. They actually took a big hit by lowering GST across the board. And this gamble, if I could use the word in a polite manner, not trying to sound gambling as the word, has actually paid off. It has spurred demand, it has spurred consumption, and we have seen it across segments. Automobile, white goods, gold, silver is on a mad rush. But everywhere we are finding the impact of this GST cut. Whatever sacrifice the government took by lowering taxes is more than likely to be made up by increased demand consumption that is now emerging. What it has also done for the economy is given it that thrust which was needed to get it out of the tariff problems that we had. Now let's come to what it means for FMCG. I believe what we have seen, the focus that Priya has said from a HUL perspective, that volume is what is going to drive them, is something which is very, very good for the industry. If volume continues to pick up, I believe we are in for decent times for the FMCG sector going forward.
Fair point. And as we are now looking forward to this new Samvat year 2082, we've also had NSE MD and CEO Mr. Ashish Kumar Chauhan, as he's spoken to Business Today's Ridhima Bhatnagar, sharing the optimism for the year ahead and insights on the upcoming NSE IPO as well that's expected in the next 7 to 8 odd months. Let's listen in to what he had to say.
Sir, I want to start by asking you that, if we see the Samvat, the market has been range bound from 23,500 to 24,000. So how do you see do you see the consolidation going forth, or you see a momentum picking up in the coming year?
In a way, last entire Samvat has been fraught with many, many uncertainties because of the tariff war. Before that, it was the US elections, and then many wars across the world, and then Operation Sindoor and all. And so the market has been range bound over last 1 year. Nifty has given only 6.5% returns, which if you compare with FD, it is comparable. But if you compare it with other asset classes like gold or silver, it has given much lower returns. And of course, compared to the rest of the world, we have given lower returns in last 1 year. But if you take last 5 years, I think 3 years out of 5 years, we have been the best performing market in the world. And the last year, in a way, has been slightly sideways. The issues which came about in terms of the tariff wars and also overall slowdown because of a variety of reasons, I think are now slowly going away. Now we are almost reaching on Nifty 26,000, which is telling you that the all-time high is very close. In fact, 2 days back, we got the Bank Nifty reaching all-time high. And so it's going to be, the next Samvat is going to be kind of coming with the newer hopes and the fact that some of the results of the geopolitical diplomacy are also going to be seen soon in probably November, December, when hopefully we will have some good news coming on the India-US tariff front, as well as the investments which have been made in the PLI framework on, we have become very large exporters of the telephones across the world, but also the chips, that is electronic chips manufacturing is going to come into full play in next Samvat, and many more things, including the fact that the services exports have been going up by 14.5–15% year on year is a good sign going forward. And GST reduction or GST reforms have given you a day yesterday where we delivered 125,000 cars in a single day to the consumers. I mean, I recall in my life days in 85, 87 when we were not making even 100,000 cars in a year. Now we are delivering 125,000 cars in a single day. And so you can see that manufacturing is going up overall. There is a good buoyancy going into the new year. That is a new Samvat.
When can we expect the NSE IPO, and what are the sector and the themes you see or feel could be the sunrise sectors?
In a way, NSE has been asking for a no objection certificate from SEBI so that we can prepare our draft red herring prospectus. That is going on for last almost 9 years. Hopefully, if we get the no objection certificate now in next couple of months, it would take around 7–8 months more for us to prepare the RHP and also get the SEBI's approval to go ahead with our IPO. So probably sometime, say 7–8 months after we get the IPO, NOC for the IPO, we would be able to roll out our IPO.
Next year.
Absolutely.
All right, so that was Mr. Ashish Kumar Chauhan definitely talking about what he believes the themes could perform as far as the next sector, next new year is concerned, and NSE IPO over the next 7 to 8 odd months. 3:30, let's quickly look at how the markets have shut down on day one of full-fledged 2082 Samvat year. So we flat Towards the end of the session, we've actually given up all the gains and we are absolutely flat, just marking and saving the blushes for ourselves. 25,869 is the level at which the Nifty has shut shop. It's the Nifty Bank that has actually slipped into the red. Remember, both the Nifty and the Nifty Bank had opened about 0.5% higher, and we have actually seen the Nifty Bank now slipping into the red. IT sector continues to hover high, about 2% higher. That's the top moving sector in trade today, of course, led by all the large cap stocks, Infosys, HCL, Tech Mahindra and TCS, all of them buzzing in trade with renewed hopes that the US tariffs are going to be reduced probably. Going forward from here, those are the top gainers that are on your screens. Top three, all three of them are from the IT pack. Let's move forward to the next slide and see how some of the other gainers have shaped up. So you can see Axis Bank, Shriram Finance from the banking and the NBFC space also supporting, but ONGC from the upstream companies, that's up by about 1.5% as the oil prices continue to rise right after these sanctions were placed by US. Zomato, Ultratech and Eicher Motors are some of the top laggards in trade, from the online tech giants to cement companies that are lower. Bharti Airtel has given up some gains. You're also looking at Adani Ports and JSW Steel as among the top laggards in trade. Coming back to Arunji and trying to understand, his own choice of sectors in terms of the key stocks and sectors that could perform in the new year and the strategies that investors must follow to continue to generate alpha for themselves, even as the continuation of uncertain world continues in the new Samvat year as well, sir. How would you look at what's going to make money for investors?
So, Sakshi, you've asked a very, very tough question. So I won't wiggle out of not giving you an answer, but still try to put things in perspective. Very clearly, mid cap and small cap, which have been the driving force over the last 2-3 years consecutively in the markets, have failed to deliver this time. It puts paid to a lot of hopes that investors have, because we all realize that retail investors are heavily invested into mid cap, small cap. What has gone wrong for them is the expectations that markets would always continue to deliver sub, uh, you know, uh, huge returns for investors and outperforming the cap. This hasn't happened at all this time. Let's also look at another thing that is happening. The choice of IPOs hitting the market is at a new high. We've already had 84, 85 IPOs on the main board, which have listed in the current calendar year. And we still have about 2 months to go before 25 runs out. The number could easily cross maybe 110 or thereabouts by the time we end this year. The pipeline for next year is even stronger. In such a scenario, the choice that investors have is becoming far larger. Coming to your
Absolutely.
question of what sectors I like, coming to your question of what sectors I like, I believe it's still early to actually zero in on some of those sectors. Hopefully, the trade agreement would happen maybe in the next 10 to 15 days. Once that happens, some of the old favorites, textiles, seafood, and many of the other export-based companies would come back into focus, which are currently languishing. So I believe it's better not to jump the gun, but let's have the trade agreement in place before we choose for Samvat year 2082.
Got that. One question that we've got from one of our viewers is from Shivam Sinha from Mumbai. He says, will today's IT sector rally continue going forward? Is this also the start of a broader bull run in this sector as well? Remember, IT sector has been the worst performer of Samvat year 2081. It's dropped by about 18%. How would you look at that question and address that one for our viewer, Arunji?
I don't think there is any great event that has happened which can lead you to believe that the worst is behind us, and this rally that we have seen today is what you can build into or start buying into. I believe we still have a lot to do. H1B visa does not affect the IT companies as much was expected. However, you could see realignment taking place in the IT sector, and many other companies which used to hire Indian IT professionals looking to set up shop in India and set up their GCCs out of India rather than taking Indians abroad to work in the US.
Absolutely. Arunji, it was a pleasure to have you as is always. So thank you so much for being with us. And with that, it's a wrap, viewers, on the Business Today show. And in case you too have any questions about your investments in mutual funds, in your SIPs, also stocks or gold related queries, then please do send them to us on the number that's flashing on your screens. And don't forget to catch the market opening action tomorrow morning at 9 a.m. with Abha Bakaya.